Pantheon Resources is developing its 100% owned Ahpun and Kodiak fields encompassing 259,000 acres on Alaska's legendary North Slope, holding approximately 1.6 billion barrels of Alaska North Slope crude and 6.6 trillion cubic feet of associated natural gas. We've got Max Easley, CEO, joining us to explain the story and discuss future milestones and take questions from our audience. It's Tuesday, March the 25th. I'm Martin Gagel with Market Radius Research. Please remember, this is neither recommendation nor investment advice. We're here to learn about the company. Max, thank you very much for joining us. I'm really looking forward to this conversation. Having a small cap story with substantial assets on the Alaska North Slope is pretty exciting. How are things going for you today, Max?
Very well, Martin. It's week 4 for me in the role.
Yes.
So I've been around the oil patch for a long time now, 30 some years. And to my astonishment, a few months ago, someone told me that someone has, on the order of 2 billion barrels in my backyard in Alaska. And being a native born and raised Alaskan, I just couldn't pass it up. And it's a very exciting story.
Yes. Well, why don't you give us a quick overview on Pantheon, and then we'll have a little fireside chat, and then we can take questions from the audience.
Sure. And a lot of this is me presenting the company. A lot of it is what appealed me to the company. And so it's very, very exciting to talk about it. But I'll just flip through the first slide. This is a grand summary of the investment proposition that Pantheon represents. The first and foremost, it's a huge BOE, barrels of oil equivalent resource opportunity here, oil, natural gas liquids, and gas, and it's 100% working interest. So it's a sizable acres position at 258,000 acres. And 1.6 billion of those resources have been certified as 2C resources, not just a company estimate. So these are very, very viable resources. And I would really tip my hat to the previous administration here for the exploration and appraisal results. From the early days of searching for source rocks to what the reservoirs we have today. It's been a phenomenal exploration and appraisal story. And now, of course, it's time to pivot this into development and production. There's a lot of positive news around Alaska. I'm sure all the listeners today have been hearing it, not only from the state of Alaska, but from the U.S. federal government about the potential for Alaska as a strategic resource of the United States. But even in our own little news flow, in December of the last year, the Megrez-1 exploration well was drilled with enormous upside versus the pre-drill estimates, and I'll talk about that later. So the news flow from inside the company, the state of Alaska, and the federal government is all tailwinds to make Pantheon a success story. I'll show you on a map in a minute, but when people think about Alaska, they think it's cold, but it's also very expensive because of the infrastructure. The first one is certainly true. As a native born Alaskan, it does get cold in Alaska. But one of the advantages of Pantheon's resources is the primary logistics highway, the Dalton Highway, which links the North Slope of Alaska to the rest of the state, runs right through the middle of the acreage. And so does the Trans-Alaska Pipeline, which is the oil egress infrastructure. And the proposed gas pipeline from North Slope would also run right down the middle of the acreage. And so it's a huge advantage to not have to build infrastructure to remote locations. And instead, it runs right through the center of the field. The other thing people think about Alaska is its long cycle capital. And so it takes 10 years to develop. It's multi-billion dollars before you see any oil production. That's not the case with this acreage position. It's very similar in development concept, what you would see in the Permian or the Bakken or the Eagle Ford, where you drill wells and get immediate production and immediate free cash flow. We can talk about that as well. Gas egress is a big deal for the state of Alaska. I don't know the precise figure, but 40 to 50 TCF across the entire North Slope of Alaska, looking for a market. Well, the first company to sign up for that is Pantheon. There's a lot of associated gas with our oil production, and we've signed the first gas precedent agreement with the state of Alaska to enable the development of the pipeline. Again, creating huge alignment with the state of Alaska in adding value to our own assets as well. And as I mentioned, the previous administration is an extremely experienced team, really exploration all-stars. And now we're pivoting that to development and operations all-stars. I'd like to include myself in that, humbly. but that's the idea, is to pivot this to exploration, from exploration to development operations. But to orient the audience who aren't familiar with the North Slope of Alaska, this is about a third of the state of Alaska, from the Brooks Range up to the Arctic Plain. Prudhoe Bay was discovered in 1967. It's the largest oil field in North America. And through history, most of the development, in fact, all of the development, has been on the coastal plain. And that's where you find very large conventional reservoirs, Prudhoe, followed by Kuparuk, et cetera, et cetera. And the analogy I like to use is, having spent a lot of time in West Texas, is if you would have flown into Midland, Texas in 1950, you would have seen no development really until you landed, because it was all centered on the Central Basin Platform, again, where the large conventional reservoirs are. If you flew into Midland, Texas today, the development starts about 100 miles west or 100 miles east, because industry has moved on to smaller traps, and in many cases, the source rocks. And that seems to be the case in Alaska, given the discoveries that we've made and communicated. One of our competitors, Apache and Armstrong, recently announced another discovery. So all of the development is now moving south into smaller but high quality reservoirs. And the other thing I would point out on this slide is that red line and the dotted line going north to south, that's the corridor for the Dalton Highway, which is the primary logistics conduit from Prudhoe Bay and the other fields to the center of the state for materials, services, et cetera. And the red one is, of course, the Trans-Alaska Pipeline, which is the oil egress from the North Slope to Valdez, Alaska for export. And the gas line will follow that same corridor on this map, but then deviate to South Central Alaska, as you can see in the upper right, to Nikiski for LNG export. So just to orient where our acreage is relative to the rest of the fields on the North Slope.
Max, sorry, just on that map there, can you just go back about how far? I don't see a scale, and maybe it's just because it's small. About roughly how far are you from your property to where, let's say, the Prudhoe Bay green stuff starts? How far is that?
It sort of depends where you are in that. Alaska's a big place, but 50 miles-ish, 20 miles. It's not that far, really.
Yeah, okay.
That far. It's in between pump 1 and pump 2.
Gotcha.
The Alaska Pipeline. And so the assets themselves, I'm going to show you a geologic cross-section in a minute, but there are three principal assets here. There's Kodiak, which is a large basin floor fan. That's where a bulk of reserves are, 1.2 billion barrels of black oil. And then there's Ahpun West. And for the geologists in the room, those are top set reservoirs, basically the coastal plain of an fluvial system. Okay, hopefully geologists got that. And then Ahpun East is the same thing, top sets on the east side. And what's important is the Sag River, which is a very large river, runs just to the right or the east of this map and underlies the Sag River. I'll come back to that. And so for these assets, currently pre-production assets, we do have a market capitalization of nearly $1 billion now. So there's a lot of interest in these assets and the values they bring. But you know, for the people who do the math in the room, based on company estimates, targeted NPV of these, as we see them today, is on the order of 7 billion. With a market cap of 1 billion, you can sort of do the math on what the upside in this security could be. Again, for the geologists in the room, here's a cross section going from west to east. So the source of the sediment, of course, is to the left side or the west side. And the Kodiak is a large basin floor fan. As you can see on the map, it's a very, very thick rock, up to 950 feet. And reservoir quality is highest at the source, which would be the west or left side of the diagram, and gets progressively tighter and less productive as you go to the east. The top sets are the yellow ones above that, smaller reservoirs, but slightly higher quality. And then when you go over to Ahpun East, you get the same top set reservoirs in more, which I'll come to on the next slide. So lots and lots of reservoirs here. So the Megrez-1 discovery well was December of last year, and the original intention was to discover or prove up top sets 1 and 3, which is an extension of the discoveries and appraisal to the west. On the way down, this oil and gas was discovered in 7 discrete horizons on the way down. And we're testing those as we speak, flow testing them. So based on logs and cores, these are all oil bearing, but the productivity of them is being tested over the next 12 weeks. The pre-drill estimate of this was 609 million barrels, which is really the lower intervals. We haven't made an estimate yet of what's above that, but if indeed the Prince Creek and SAG are both oil bearing and productive, that number will get much bigger. But the long and short of this was, in this well, 1,340 feet of net pay was discovered, which is 4 times greater than the pre-drill estimate. And from a reservoir engineering point of view, for the reservoir engineers in the room, as you go from the bottom top set 3 up to lower SAG 3, the reservoir quality just gets better and better and better, up to hundreds of millidarcies or even a darcy of permeability in the upper horizons, which would be extremely productive. So as you can imagine, the deeper reservoirs would be developed with long horizontal wells like you see in the unconventional world. And as you move progressively up the wellbore, you would find yourself, if indeed they flow at commercial volumes, a more conventional development, not using horizontal wells, but similar to development you would see on the rest of the North Slope. So extremely exciting this is, and you'll get a lot of news flow out of Pantheon over the next 12 weeks, because we've committed to the market that we will release the testing results of each zone as we test it. So we're currently doing top set 1 as we speak. Once we get a flow result on that, we will communicate that to our investors in the market and progressively do that across all 6 zones that we're going to test. The only zone we're not testing here is top set 3. We did a full core on that. We understand the reservoir properties quite well and didn't feel the need to do a flow test on that one, but we will test the 6 shallower horizons. So, pivoting, Alaska LNG, or Alaska gas more generally, there's actually 3 projects here, not one. One project is the gas pipeline itself to move gas molecules from the North Slope to the South Central gas market and indeed to Nikitsi for LNG. The 2 other projects are, one is the LNG facility itself to chill and liquefy the gas for export. And the 3rd project is not relevant to Pantheon, but it's relevant to the rest of the North Slope producers, is a CO2 extraction facility, because the North Slope gas, other than ours, is largely CO2 bearing, and that's not suitable for gas export. So they would have to build a plant to extract CO2. So phase 1 of this pipeline of this project is the pipeline itself, which is to transport gas from the North Slope to the South Central market. We've been talking about, we being Alaskans, talking about an Alaska export project for nearly 30 years. It's always been about what's the right market for LNG or continental US. A new development is the South Central Alaska economy is deficient of energy, which is what the graph in the upper right is. Historically, all the energy for South Central Alaska and the rail belt has come from Cook Inlet gas. And Cook Inlet is getting heavily depleted now, to the point where to supply the energy needs of South Central Alaska, you either need to ship gas from North Slope or import LNG. And it's proven to the state that it's more cost effective for consumers to ship Alaska North Slope gas than it is to import LNG. And the first customer or shipper of that is Pantheon. So we've signed a 20-year gas sales precedent agreement with Alaska Gas Line Development Corporations, that's AGDC, to supply up to 500 million a day of gas into that market. And one thing I didn't mention when I looked at the geologic cross section is one of our reservoirs, Kodiak, has been tested to include helium in the natural gas stream. Helium is a very valuable commodity. So as part of this agreement, we have the rights to extract the helium from a future LNG project and ship that to market. And that adds enormous value to our gas resource. It's between 0.5% and 2% helium. So we ostensibly down the road, we could be a very material helium producer for the world economy also. And everyone reads the news. There's immense interest in Alaska LNG in Asia. Some of that is to satisfy needs for a reliable, geopolitical, stable supplier, and some of it is balance of trade with the United States. But enormous interests and news flow coming out from Asian governments and companies to support this project. Still early days, but it's looking extremely likely that this can occur now and will occur now. And Pantheon is sort of in the pole position to be one of the first suppliers of this gas. For one reason, we have a contract, and B, our gas is different. So the gas, as I mentioned, does not include CO2, and it's directly along the corridor, so easy access to the gas pipeline when it is built, and it's material. 6.6 TCF already, and that number will almost certainly grow through further exploration and appraisal. And what I will leave you with is sort of the schedule. So that all sounds very exciting. When does it come to fruition? So on this graph, there's various milestones, things we would do above. And what we're doing right now is the drill and test MEGRES-1, which is a transformational item for us, not only to extend the top set reservoirs east of the highway, but also potentially unlocking a conventional development as well, should that well test be successful. So there's various things we would want to do activity-wise. If indeed we get confirmation of that shallow resource, conventional resource in MEGRES, we would likely want to delineate it and drill an appraisal well. And also, I think everyone wants to see the reservoir properties of our reservoirs are very, very high for what you would call an unconventional development, drilling horizontal wells and fracking them, order of magnitude or more productive than you would find in the Permian, Bakken, or Eagle Ford. All that's based on log analysis, flow tests, extrapolating conventional wells to horizontal wells. And so we probably will need to here shortly drill a commercial demonstration well. So drill a 1 or 2 mile lateral right down the middle of the heart of our acreage to demonstrate to the world that the type curve that we're espousing will come to fruition. So we haven't made any decisions on when exactly we'll do that, but we will do that in due course. And on the bottom, you can see the general schedule. So Ahpun would be the first development because that's the shortest cycle cash flow. So you drill wells, you generate free cash flow immediately. And in our analysis would indicate that $150 million of investment gets these assets to first production. A further $150 million would make these assets free cash flow sustainable kind of forever. So you would finance further developments based on free cash flow generation from the first development. And so the FID currently on this is 2027. The critical path for that is the environmental impact process with the Corps of Engineers. There's a short version and a long version. Our footprint is very, very small and similar to what was already approved in Willow and other places. So we're hopeful we'll get the short program. So a finding of no significant impact, FONSI. But this is based on the conservative view. So we do the entire 18-month process, which would result in an FID in 2027. That could easily come forward. And Kodiak would follow on. When you think about Kodiak, essentially our development plan here is to go from east to west. So you build pads from the highway to the west. And for those who are familiar with West Texas, it's kind of like the Sprayberry and the Wolfcamp. They overlay each other. So initially it would be all Ahpun, but as you go west, eventually you'll have Kodiak underlying Ahpun, and you would have both reservoirs being developed from the same surface location. And if you go far enough west, it would be Kodiak alone, if you remember the geologic cross section. So Kodiak will follow Ahpun basically as we go east to west. And then you can see on the bottom, the gas line project. So it's currently in FEED, as was announced by the Alaska Gas Line Development Corporation, and which could result in an FID as soon as early next year. But the startup of that, the governor recently was suggesting dates of 2030. That would be great. But our assumption is for at least a year or two, we will be injecting gas into the reservoir in anticipation of export. So all of our business plans assume gas reinjection. But But should the gas line come to fruition, we would no longer have to drill wells to inject gas, which is obviously a huge upside for our asset base. And I guess I will leave you with is this was the team we have at the moment. Very, very experienced people that have done this all over the world. And this will grow through time. This is largely the exploration and appraisal team. And through time, you'll see this develop more into a development and operations crowd in addition to the exploration and appraisal objectives that remain. But we're assembling what really is an all-star team to take this asset from notion to exploration appraisal success and then to commercial success in coming years. So I'll leave it at that, Martin, and we can talk about it.
Excellent. Max, that was a really good, nice tight presentation, and you covered a lot of territory there. I appreciate that. I'd like to actually circle back to you. You've been on the job 4 weeks or so. Can you just talk a little bit about, you put yourself humbly in the all-star development and operational side, and can you just tell us a little bit more about your background?
As I mentioned, I'm Alaskan born and raised, and sort of in the shadow of the original Prudhoe Bay development. And I went to the University of Alaska, so I'm a petroleum engineer. And I started my career on the North Slope of Alaska at Prudhoe Bay in Endicott. And what a fantastic place to start your career. Every reservoir mechanism you can read in any textbook exists in these fields. Every well concept ever thought about was developed in these fields and its giant scale facilities. What an engineer's playground. So I learned my trade on the North Slope of Alaska. What a great place. But BP was my original employer, and they were the predominant operator in Alaska at the time. And they're very, very good about developing people internationally. So I left in 1997, and I worked in North Sea for a long period of time, offshore developments. I found myself in the corporate center, and BP was very good to develop me technically and commercially. And to my astonishment, I found myself as the chief financial officer of BP Trinidad and Tobago, which is the largest affiliate that BP had at the time, a 400,000 barrel a day equivalent integrated gas business. And then more time in the North Sea, then back to Alaska. It's like, local boy done good, came home after 12 years. And then to BP, for another 4 or 5 years in finance and operating roles. But having been at BP at 25 years, a very large company, I wanted to try something very different. So I left BP very amicably. I like BP still to this day, and went to an American independent called Apache Corporation. Apache Corporation had a huge footprint in the Permian that they really wanted to develop. At this point, 10 years ago, I suppose, I'm an offshore guy. Unconventional reservoirs, shale, that's a seal, not a reservoir. But I was the COO and then regional president of Apache's business there in the Permian. And I found myself in good company 10 years ago, Martin, because 10 years ago, no one knew anything about the unconventional business. So I was in good company. And that's right when everyone was learning how to unlock these things, not only technically, but commercially. And did that very successfully and grew that very, very quickly. Had 10 rigs, I think, at one point. But then I got the opportunity to do it again in the Montney. So I joined Petronas Canada, who's a major investor in Canada, and they have 1 million acres of Montney to serve both the domestic market, but also the feedstock to LNG Canada, which is being commissioned right now in Kitimat, British Columbia. So again, grew that materially, 2 or 3x over 3 years. And then that's when I got the big surprise, Martin. Someone called me and said, well, what do you think about 1.6 billion barrels in your backyard? It was just too good to pass up, Martin, because not only is it amazing from a technical and commercial, but it's also an opportunity to give back to my home state. This is a big deal for the state of Alaska to have a major operator that's not one of the usual suspects and enable this LNG and gas line to occur to the benefit of everyone in the state. So it's really good to be home.
Excellent. All right. You talked about with on the Megrez that you're going to be doing some horizontal drilling as well. Is that just horizontal, or is that unconventional with fracking and so forth? Or just explain that a little. For I'm still a layman, so just on a not too technical basis,
Yeah.
what that horizontal drilling consists of.
Yeah, this is a huge misconception and confusion in the entire industry, actually. What's unconventional and what's not? Strictly speaking, if you were talking to geologists and reservoir engineers that write technical papers, an unconventional reservoir is a source rock. So it's where the oil was formed and never migrated. That's a source rock. And that unquestionably is unconventional. And you develop that because the permeabilities are very, very low with horizontal wells with lots of fracture stimulation. That same development concept works for tight reservoirs that are not source rocks. So the rocks we're talking about here in Pantheon's portfolio are not source rocks. They're tight reservoirs that oil migrated into. But it's the same development concept. So you drill horizontal wells, you frack them. The only difference is these are higher permeability, higher reservoir quality than most source rocks. They're just better than source rocks, but the way you develop them is the same. But as you get into shallower or more porous and permeable reservoirs, it makes most sense for capital efficiency to develop that with more conventional approaches, vertical deviated wells and water flood and things like that, because oil doesn't move very well through very, very tight reservoirs. So that's why you access it with all these fracture stimulations. In more permeable reservoirs, oil flows freely through the rocks. So there's no need to spend the capital to drill horizontal wells and frack them because oil will flow naturally from wellbore to wellbore. And that's what we'd be talking about in the shallower intervals in MEGRES that were called the Sag River 1, 2, 3.
Okay.
Make sense, Martin?
Yeah, no, that you made me feel a little bit smarter here. I appreciate that. Um, with fracking fluids and so forth, given Alaska and its chilly climate, is there a lot of experience doing fracking in extra cold climates, and I don't know, freezing of frack fluids, and that is that a easily engineered problem away?
Yes. When I joined BP in the early 90s, most of the wells were fracture stimulated. They're vertical and deviated wells. They're not horizontal, but they were
Okay.
fracture stimulated to make the wells more productive rather than
Yeah.
access more reservoir. And so it's not unknown in Alaska by any stretch of the imagination. At this scale, doing 2,000-mile laterals, that's new territory. And so it's logistically, it's more difficult. You need a lot more water and a lot more sand to do this. So technically, it's not problematic. Logistically and supply chain will be the issue. So as we go into full development, we'll be looking for industry partners for the long term as suppliers to help us make this happen. And given it's routinely minus 40 degrees, obviously water tends to freeze when it's minus 40. So initially, drilling will be year round, as it always is in Alaska. You drill off gravel pads, and you can do year round, 24 hours a day, 7 days a week. Completions will probably start by batch completing in the summer to avoid, the learning curve of having fresh water in the proximity of minus 40-degree ambient temperatures. But through time, I would expect we'll crack that problem and we'll be able to do it year round. But for the initial development, it sort of makes sense to do it in the summertime. So you drill, for example, 12 wells and you frack 12 wells all at once
Okay.
as a batch. And that's better for the reservoir anyway. They call it zipper fracking. And so you basically move along the well bore and to maximize the amount you contact the reservoir rather than doing an individual well by itself.
So we should be expecting a lot of news flow out of the MEGRES over the next 12 weeks as is it from 6 of the zones that you'll be reporting data from?
That is correct. And we're actually engaged with the first one as we speak. So it won't be long before we get news flow on the first interval.
Yeah. Is it fair to say it'd be roughly every 2 weeks some news coming out, 12 weeks divided by 6 and that?
I wouldn't want to give myself a hard target because the limitation here is access to services. So we share the same service fleet that they use everywhere on the North Slope, Peru, Barrick, Hillcore, ConocoPhillips, Exxon, everyone.
Yeah.
So we're not in a huge hurry. So we're not going to spend money at a premium for pace, but broadly, every 2 or 3 weeks, you'll hear a result.
in 12 or whatever weeks when you get the data back here, what happens then at, let's say, at Pantheon HQ? You analyze the data, and then what kind of decisions do you start to make with that data? Your priority list of which zones to go after, where to drill new holes, or explain the process after you collect that data.
It's a great question, Martin, and this is all sort of hypothetical until we get a
Yeah.
result. But there's two things in my mind. If we find commercial conventional resources in the shallow horizons, those will be extremely valuable. So we'll want to delineate that resource. And the difference for a conventional reservoir versus an unconventional reservoir is, for a conventional reservoir, because oil flows through the rocks freely, you want to maximize reserves. So you have to understand the reservoir properties very well, because you'll probably want to water flood it. So you inject water to push oil from wellbore to wellbore. So you have to understand the reservoir pretty well to do that. But the first step will be to delineate it. So drill an offset well to make sure that the geology links from one point to the other. So you have a connected resource. So we'd want to do that for sure, because it'd be such a valuable resource to have. And the other one, as I mentioned earlier, is we want to drill a horizontal commercial demonstration well. So for example, the completions we're doing right now in the top sets and megres are still deviated wells. And so we're going to fracture stimulate them, and we'll get a result. But that's the equivalent of 1 or 2 stages in a horizontal well that might have 20 or 30. So you have to extrapolate from a deviated well to a horizontal well. So we want to drill a horizontal well to demonstrate to our investors in the market and the state of Alaska that this resource will deliver the type curve that we believe it will. So that will be coming as well.
You called it like a commercial demonstration well. Would that actually produce ongoing oil, like revenue producing oil, or at a future date, or more near term, or what do you mean by that classification of a drill?
It's really an appraisal well.
Okay.
Because we won't have all the full facilities in place and pipelines, and we won't have access to the Trans-Alaska Pipeline yet when we drill this.
Yeah.
So it really is just to demonstrate what the wells are capable of, to give everyone the confidence to invest the capital for a full development, including tie into the Trans-Alaska Pipeline, et cetera.
How hard is it to tie into the Trans-Alaska Pipeline?
Well, first of all, you have to build all the infrastructure from where the well is to that point.
Yeah.
And our intention is to hot tap into the Trans-Alaska Pipeline, which hasn't been done before, but it's done everywhere else in the world routinely. Is that while the pipeline is still flowing, you put the right equipment on it to cut an egress or ingress location, and you flow directly into the pipeline. So that's going to take a lot of engineering and time, and it's a federally regulated common carrier pipeline, of course. So there's certain steps you have to take to do that. But technically, there's absolutely no barrier to it. It's just a matter of doing it the right way. But that will be part of the sanction of the full project.
Okay. And so the pipeline would keep running. You would put a unit, drill into it, attach your pipe, and then so they wouldn't have to shut it down and sort of clean it out. And wow, okay,
it's quite routine in the oil and gas industry to do that.
Okay.
But it just hasn't been done on this one before, so everyone will be obviously very careful with it, as we will be.
If things go reasonably well to schedule, what you would be producing oil and revenues in 2028, or is that roughly the timeline?
Yeah, that's the base case, and there's a possibility that could be 2027, based on the regulatory timeline, but we'll see.
Is that the biggest factor in that potential timeline, is the regulatory environment?
Yeah, that's a critical path.
Okay.
Yes. Mm-hmm.
Cool. I'd like to switch over to the natural gas pipeline. I was surprised when you said, given the fact that there's much of the natural gas on the North Slope has a lot of CO2 in it, that they're going to build the pipeline first and then the CO2 extraction facility. If you're the only ones with clean natural gas, you think they build the CO2 extraction first, or in combination with the pipe, so they're kind of finished at the same time. Did I get that right, or can you explain the rationale? And I guess it gives you an advantage given you've got the clean stuff.
As an Alaskan, I would say that the first priority is to provide energy to South Central Alaska. because that's what the voters want, and that's what the people want. So we can supply that.
Yeah.
And there's no CO2 in our gas, so it's export ready. So basically, straight from the wellhead, you strip out the liquids, and it goes straight to market. So it's very expedient, and it enables the pipeline to be developed very expediently. It's more problematic to build a very large scale CO2 extraction facility on the North Slope. And so the North Slope producers will be thinking about that themselves.
Yeah.
The Exxons, the Conocos, and the Hilcorps about how they want to do that when they want to do that. But as far as Pantheon is concerned, we're ready to go to market as soon as the market's available for us.
Well, we have a bunch of questions from the audience that are queuing up here. So let's start with that. Everyone is focusing now on the now, what's happening now, but where do you see Pantheon in 2 years?
In 2 years, either we are on the ramp up or we're getting ready to be on the ramp up. That would be 2027, right? Early 2027.
Yeah.
Between now and then, I think the intention would be to secure all the investor confidence, the financing for this, and all the engineering required to execute would be in place in 2 years. Then it's just a matter of drilling wells at that point.
There's a question here about the helium, and I wanted to ask, dig into that a little bit more. That's perspective, but you're saying between 0.5% and 2% helium, which I think is pretty, very high concentrations of helium there. Could you just, not a specific question, but just sort of flesh out the opportunity in helium and how you could see that working?
Yeah, this is a new area for me.
Yeah.
Helium is a very useful industrial commodity for semiconductors, for aerospace, and I guess balloons for clowns as well. But it's a very valuable commodity. It doesn't show up by itself very many places. It's associated with other developments. So I think Qatar is a big producer of helium. I think Exxon is a large development in Wyoming where the gas has helium attached. So it's sort of a centralized source, but it's quite rare, and so it's quite valuable. And the need for it is going to grow unquestionably through time. So for us, with a large scale of this and the rights to extract it as a byproduct of the LNG process, as a centralized source of helium, is a huge business opportunities by the West Coast and beyond for all of those things, be it semiconductors or aviation or even balloons for clowns in California. We'll see, but yes, it's just a very valuable commodity from a very centralized source. And if you do the math, Pantheon has the potential to be one of the largest helium producers in the world at full scale development of the Kodiak field.
Well, that's a good overview on that. Okay, this is about the market more in general. Does Max think that we are close to peak oil production in the lower 48? Have we reached peak, and there's talk, and I think there's evidence of declining rates there. Could you just talk about, with your extensive knowledge operating down there, your views on oil production, I guess, in the lower 48?
Yeah, I guess the question is really about unconventional production in low 48,
Yeah.
Bakken, Eagle Ford, and Permian, Wolfcamp. I think everyone has noticed a lot of consolidation, companies acquiring companies. Why would they do that? Largely, it's because they're worried about their inventory. If they're worried about their inventory, that means inventory is finite. And I think you'll see through time, I don't know if we're at peak now, but given the pace of development, it won't be long if we're not. But then it just becomes, what's the quality? Because they call it tier 1, tier 2, tier 3. Everyone wants to drill tier 1. Those are your best wells. Eventually, you find yourself in tier 2. But the outcome of that really is, what does the oil market look like? If oil drops to $30 a barrel forever, the lower tier stuff just won't be economic. But if world energy demand maintains the current pace, tier 2 and tier 3 will maintain their economic value or even increase. Because the unconventional world, used to be an old saying that below $40, none of it works. Above $40, it all works. I think that number is like 60 now.
Yeah.
But for those reservoirs, it really depends on what the commodity price is to stimulate investment. but it's a very popular place to invest. It's in the United States. It's very geopolitically stable, and the unconventional world is very reliable. So you know what you're going to get. Because 10 years ago, people would say we love unconventionals because there's really not a lot of reservoir risk. It's just more statistical than physics, but they are a bit capital intensive, and so it's a trade-off between the stability of the profile that you can predict and promise to the market versus the capital intensity it requires to sustain it. And that's the calculus that the operators go through. And that's why you're seeing the consolidation, because scale helps. By Exxon acquired Pioneer, et cetera, et cetera.
Well, when you were back in there, those are the days of drill, baby, drill, right? Where it was all about production growth, not necessarily the specific economics. They just wanted to see growth. And now they're very much more on what's the ROE on this drilling and these investments. Did I get that right?
Exactly right, Martin. And I lived through this. If you wind the clock back, it wasn't that long ago. I guess I won't say which executive, but a very senior executive at a very big oil company said that oil will never be commercial from shale. You wind the clock forward, 5 or 10 years, people were trying to demonstrate commercial quantities from it. Once that was achieved, it became sticks on maps. So you drill a standalone well, you multiply that by 1,000, and you say we have 1,000 times more value than that one well. Then reservoir engineering always matters. So once you start stacking wells next to each other, I call this the secret sauce, Max's secret sauce, which is how do you get the right balance between the density of your wells, how far apart they are, and how big the completion is, how much water and sand. If you get that combination right, you're the most capital efficient operator. And that's what you're always trying to achieve. And the faster you can arrive at that conclusion, the better off you're going to be. Because if you do it through trial and error, you might run out of inventory before you figure out the secret sauce. And that's why you see a lot of advanced appraisal methods using fiber optics and things like that. It's just to accelerate the appraisal objective to get to the most capital efficient solution as soon as possible. So the world of sort of tight reservoirs and horizontal wells, I'm avoiding the word unconventional here, has advanced amazingly over the last 10 or 15 years. And, the hope for all of us, speaking as an industry person, is what does secondary recovery look like in the unconventional world? Because right now you drill well, you produce it, and then when it's done producing, you shut it in forever. Conventional reservoirs, you water flood them, then you use tertiary recovery using CO2, other things. What's that look like in the unconventional world? And should that come to pass, you'll see a second generation in the Wolfcamp, Bakken, and Eagle Ford. But this industry has a funny way of reinventing itself all the time. And that's just yet another version of reinvention that will occur in the future. That's a long way from us. We're drilling our exploration and appraisal wells. We're going to drill our first development wells. We'll be watching with a keen interest what happens in those lower 48 assets.
All right. Well, thank you for that market perspective. That was very interesting and educational. What is the status on the EIS application process?
Can't give you a specific answer. We're sort of underway, but we haven't had any specific milestones attached to it yet. That's, I guess, all I can say about that right now.
Any status on the U.S. dual market listing process?
As we disclose, our intention is to do that either at the very tail end of this year or the beginning of next year. Some of that is all the requirements to list in the United States are different than the requirements to list in the UK. So we have to fulfill SEC requirements. So we're actively doing that. So we're going to stick to our guidance that we would list in the United States by the end of the year or early next year. And we're hoping that attracts a different additional group of investors. We love the investors we have today.
Yeah.
We'd like to attract more out of the US markets. Some of the institutional investors that are less prone to invest in an AIM-listed stock. But so we have a listing in the United States that should be very helpful and avoid dilution of the equity.
All right. And typically with a new listing, there's often a concurrent financing to sort of bring in new investors. And you're obviously in development stage, you need capital. And sort of long-winded question here. And then you also, in your presentation, you discuss sort of two phases of 150 million, then another 150 million. to get sort of self-sufficient on the capital side. Could you dig into, is what you're saying, you need $300 million more of capital to become self-sufficient? And how do you see that cap structures? How much equity? Also, a lot of, depending on how different wells sort out, how much the easy stuff there is, and so forth. But with that big long preamble, you can just talk about general thoughts on the capital strategy, how much would need to be raised, and your general approach to doing that.
So yeah, I mean, we find ourselves in a great position because we're fully funded for our commitments for a long time, actually. As people would have noticed that we closed a bond that was in the news today. So we're well funded for the moment. So there's no need to issue equity or anything like that right now. But looking down the road, like any company, we have basically three options. You issue equity, you find a partner, or you get financing. And one of the benefits of our take or pay gas precedent agreement with the Alaska Gas Line is that allows us to raise project financing also. So we have three choices, and we haven't made any decisions on this, but we're highly motivated to not dilute our equity. So we either find a partner that wants to invest in this asset or project finance it. But we have so many options, Martin, on this. It's a great position to be in.
Yeah.
If we were sitting here now with zero funding and we had to go out and issue equity, I think our shareholders would be quite displeased. We're not in that position at all. We're in a great position financially with lots of options to finance that $300 million that I described.
All right. So on partners, just to clarify, you're talking about sort of dilution at the project level, sort of sell off or venture off or fund with various measures one of the projects, and that way Pantheon mothership doesn't have to issue new equity and dilute any of that.
That's right. That's right. It's very common in the oil and gas industry. It's called farming in and farming out. So
yeah.
To farm in, someone would give us a large sum of money. And in exchange for that, they would contribute capital for development.
Yeah.
And that would earn them equity in the asset. So there's no intention to do that at the corporate level. That would be at the asset level.
Gotcha. And would it, I would, just on the high level, I would think there'd be a lot of interested parties. Would, beyond the capital that people put in, having, let's say, one of the other players that are on the North Slope with expertise, are there strategic considerations from like value add from the expertise your partners could bring to it, or is it just on a sort of valuation basis that that would come into the equation?
I would very much prefer if someone joined us to bring something to the table other than money.
Yeah.
It could be expertise on North Slope. It could be expertise in supply chain. It could be expertise in lots of different ways, but it's not just a bank.
Yeah.
We have all the expertise that we need to do this, but sometimes two heads are better than one. So if we bring someone with some expertise, that would be certainly an upside.
Okay, excellent. Is the natural gas within Ahpun East also low in CO2?
Yes. Yeah. So far we haven't discovered any gas that would require any CO2 processing.
You mentioned the 7 times increase in potential market cap given the value of the reserves. Does that include the potential Megrez resource numbers?
No, it does not. It does not. So we don't haven't appraised that yet. Any notion of a conventional development of the shallow horizons would be speculative at this time. So we haven't modeled that or shared that. So it'd just be more additional value than what we've put to the market already.
The question is you were surprised at this huge resource from this relatively small company on the North Slope, and you're a native industry person in there, which I would, the question makes up, well, then probably if you hadn't heard about this story, then a lot of people haven't heard about this story. And what sorts of things are you going to be doing to raise awareness of the project, of the company, to raise awareness and presumably for benefit of shareholders to get more attracted parties?
I guess I'm doing it right now, Martin.
I was going to say that as well. I think this is a great start. So
yeah, but
well
we've been very busy in talking to investors and everyone else about what this could represent. And you should expect more and more of that. But the way I usually describe it is what I really want people to observe is activities and results, not just blind statements. So, for example, this MegaRes-1 testing, we're going to test these 6 horizons and we're going to show you a result, as opposed to just espousing what could be. At this stage, when you're pivoting from exploration and appraisal to development, people want to see demonstrated value. And that's the idea right now. So over the coming months and a year, what people should expect to see is more and more quantitative information about how commercial these assets really are.
Right. And then as well with a U.S. listing, that opens a lot more meeting doors for investors, institutional and whatnot, who are more interested in buying a U.S. listed stock as opposed to AIM listed. That'll give you a lot more runway to talk the story.
And I would imagine if I was a U.S. institutional investor that was thinking about what you described earlier, Martin, the question about, is the low 48 running out of inventory? So where's the relief valve for U.S. inventory? If all of a sudden someone says, wow, there's a massive resource on North Slope of Alaska, one of the largest and most productive petroleum systems in the world, that's going to attract some attention. And at the moment, there will be a paradigm, oh, it's Alaska, it's cold and expensive. How could that compete with the Wolfcamp Shale? But the difference really is the reservoirs are much, much higher quality than the Wolfcamp Shale. And so, yes, it is more expensive to operate in Alaska than it is in Midland, Texas. But when you do the math between the quality of the reservoir and the cost, it's actually more commercial than West Texas. But that's something that we have to demonstrate to the market through real results.
Yeah. All right. Is Pantheon hoping or expecting to find gas in their testing of MegaRes, and would it likely be the same grade as we already have?
We have no indication of a free gas cap. All of the gas would be associated gas. So oil that's entrained, gas that's entrained in the oil. And we have no reason to believe the quality will be different than same source rock as everything else. But that's the point of flow testing, is once we do the flow testing, we can see what comes out and then do the volumetrics on it to get gas compositions and things like that. But there is no free gas column that we've discovered. It's oil in place.
All right. There's a question here about the capital you need to raise, and then how much can the gas sales precedent agreement potentially raise?
At least a couple $100 million, if not 300. So
Okay.
it is material, and that would be project financing with a backstop agreement. So yes, that's one of the big upsides. I mean, a lot of people say, well, why'd you sell your gas for $1? There's a reason for that. One, it enabled the pipeline to occur. B, we get PREF rights and helium rights. And that's why. It's a huge upside for us. And also it offsets costs for us as well. Because if you don't have to re-inject the gas, that's costs you don't incur. But this is an oil play, not a gas play. So everything is to enable the oil to be commercial, and our participation in the gas line enables that massively in every dimension, which is why we were so keen to align ourselves with the state early.
Someone's asking 3 questions here. Will there be stimulation requirements for any of the identified horizons?
Well, the less permeable horizons, the top sets and maybe some of the Prince Creek, depending on what we see. I presume the question is about MegaRes. Those would be horizontal wells that be stimulated with fractures. As you move up the well bore, strictly speaking, you don't need any stimulation of those at all. Sometimes you stimulate conventional wells just to make them more productive in the short term, accelerate value, but it's not required to develop the field.
All right. Can you commingle zones to limit the number of well bores and for efficient production?
You wouldn't probably want to do that with the tight reservoirs because you want a 2-mile lateral in a given horizon. And you would just drill multiple wells in different horizons for that. In the shallow horizons, you may or may not. And that's sort of the reservoir engineering assessment. Is that the best way to maximize reserves or not? especially if you started to water flood the field, for example. Water will flow more preferentially through high permeability than low permeability. And so if they were all open, you might only produce the high permeability streaks, which would compromise reserves. And so I think that's a big depends, depending on the final reservoir assessment.
All right. Do you have any concerns regarding availability of upstream or midstream service providers? And then there is another question talking about industry suppliers and negotiating with, I guess, the energy services company. So if you just generally talking about your suppliers, what does that look like?
I would say that is on the to-do list, but it's not something I fear. The U.S. supply sector is unbelievable. The reason that the Permian became what it wasn't smart operators. It was mom and pop service companies that made that occur. And my perspective is, as we build out this supply chain, including water and sand and everything else, we'll be looking for strategic suppliers. In my experience, the working directly with supplier as a partner, not a service provider, adds more value in efficiency and innovation than simply a commoditized model. So we'll be looking for the right suppliers where we can co-create and innovate to create value, as opposed to just signing a field ticket, if I can put it that way. So it's not something I'm worried about, but it's very high on my list of things to do over the next 2 years, is to build a reliable and high quality supply chain to enable this to occur.
Yeah. And while you are in northern Alaska, that it's an oil central there. So lots of service providers are up there, presumably, and there's a lot of they know where you are on a map. So,
Yes, indeed. So there's it's not exactly a virgin territory. I've been producing there since Pruda started up in 1977. And so it's very, very deep supply base in Dead Horse, Alaska.
yeah,
But we may or may not introduce new vendors, because we don't want to find ourselves in direct competition for services with the rest of the North Slope providers.
yeah.
And what we're doing is a little bit different, long horizontal wells with factor stimulation. So a lot of our supply chain might be unique and not coexisting with the traditional Dead Horse suppliers.
All right.
Again, we're looking for the right partner, Martin. So the
Yeah.
partner that wants to do something quite different.
All right. I did not listen to your AGM, but someone's referring to something that I guess was said at the AGM. The AGM, it was mentioned that success at Megrez well would reduce the capex needed to reach self-sufficiently, but only marginally. And I guess their question is, why is that only marginally, if that was properly understood from the statements made at the AGM?
I don't recall seeing marginally, but it's a different capital cycle, if I can put it this way. The long horizontal wells and fracs, that's short cycle investment. And so you drill a well, you produce a well immediately. For conventional reservoirs, there's usually more capital upfront required, because you have to develop the field as a whole, not well by well. And so to do that, you have to build your entire facility up front. You sometimes have to have the ability to have water flood up front. And so it's a high value, but it's a longer capital cycle. And so our intention would be to finance the long cycle capital with short cycle capital. Because at face value, if you had a development in a shallow horizon that was very productive, why don't you do that first? What's wrong with you? Well, the reason is it's a huge capital appetite to do that. And that would just delay first production and free cash flow generation for years and years and years. So rather than do that, we would rather do the short cycle payback stuff early and use that to finance the long cycle capital for later.
All right.
It's a more elegant solution financially.
Someone is under the impression that the drilling license does not include helium. Has the company agreed to terms with the state of Alaska on the helium?
Work in progress. If you go way, way, way back, it must have been the 50s, I suppose. The helium was declared a natural resource that was separated from oil and gas leases.
Okay.
But we're very confident in the modern world that that can be avoided.
Max, would you consider the acreage along the Dalton Highway and TAPS and the proposed gas line all as fairway trend play?
I'm not sure I understand the question.
I don't. I was hoping you would.
Yeah. But I mean, effectively, the way I would paraphrase an answer is it's a huge advantage. There is a corridor that goes from north of Alaska down into the rail belt, the Fairbanks area. That includes oil infrastructure and a highway at the moment. And we're going to add a third leg of that stool called gas infrastructure. And it happens to run right down the middle of our field. So that is the center of our play for sure. And because of that, we will progressively develop away from the highway. So we'll start near the highway and move out. So in a hub and spoke kind of way.
Yep.
Because it's the most capital efficient way of doing it.
All right. I think that we've hit the key questions. You've covered a ton of information and provided great information, Max. So I greatly appreciate that. As we wrap it up here, just any final comments, any thoughts to leave investors with, or any thoughts to sort of tie a bow on the situation and the opportunity?
No, I think it was a great time today. I hope people got something out of it, learned a little bit more about what we're doing here and breaking the paradigm that Alaska is cold and expensive. The reality is, yes, it is cold, but really it's quite valuable. And so keep watching us, and everyone will come to their own conclusion about what's the right time to invest in this. But I'll leave it at that. I can't give you advice on that, obviously.
No.
But it's a very high quality asset. I hope everyone can appreciate that. And the news flow is going to be very progressive from here as we pivot from exploration and appraisal to development and operations. And so hopefully every single week, every single quarter, we'll go from here's what we're going to do, here's the result, and how does that advance our commercial proposition to first oil in 2027 or 2028.
Yeah. Yeah, because we're hitting a bunch of de-risking events here over the next bunch of weeks where we get information and learn a lot more about the project.
Yeah, it depends what you mean by de-risking. The resources are unquestioned. It's more about confidence in the commercial proposition. Yes.
Thank you, Max. Excellent. I really enjoyed that. I learned a ton, and I really appreciate your making the time today. Have a great day. I hope to have you back in a while, and you can give us an update on how things have progressed and what the next steps are going to be from there. So thank you very much.
Enjoy it very much, Barton.
Cheers.